Hi traders, it's Roberto, and this is a new tutorial for the mentorship program. And what I wanted to do is just go over briefly these trading strategies that we've been using. And I know we haven't been discussing them in the trade room, and this is more of a refresher. So I like to go over the 1 hour scalp system, and essentially just that. We're just going to focus on price action, so I'll get started using candlestick patterns, pivot points, 21 moving average line, stochastics indicator. So let's start with pound, or the euro yen. Also at different times of the day to take trades. So I'll just show you. Market went up. What happened in the euro yen? It just took off north, and then what happened around the, how many candles? 1, 2, 3, 4, 5, 6. 6 candles ago, which that puts us into around close, very close to the close of the London session. And what happened? 1, 2, 3, 4 green candles followed by what? A color change candle that happens to be a kangaroo tail or a pin bar. That was our sign. Now, I'm always looking for 3 or 4 reasons to take a trade. Here's my first signal. Price is overbought on stochastics. Number 2, we have a pin bar. Number 3, it's a color change candle. We enter a trade 8 pips below, and we take the trade. And how many pips was this about? So the entry would be around here. So it's almost a 100 pip run. Now, of course, this is perfect. We're not going to see every color change candle like this, but when they do move, when we see a kangaroo tail on a 1 hour chart and stochastics overbought, chances are that we're going to have a decent rundown or up. Let's see what's going on the 4 hour chart. Okay. We had a kangaroo tail on the 4 hour chart before the market turned around south. Again, on the 4 hour chart, stochastics overbought. So when we have confluence of indicators on 2 different time frames, you can find some great trading opportunities. Okay, let's look at some more pairs and see what we can find. And again, I just want to review and just go back to basics so we don't forget what has been consistent in our strategies, and that's the color change candle at specific areas, either a previous support resistance level. And let's look at this one. This is the pound yen. Took off north, gave us a false break. We had a color change candle, and the market turned around and went south. Now, stochastics wasn't exactly overbought at the time, but it was. The 2 lines were crossing to the downside, and that would have been a great trade going in the opposite direction. Let's see if we have any more trades set up. Again, let me add stochastics indicator because that really helps us determine whether market is overbought or oversold, and then we just need a candlestick pattern, a color change candle to qualify a trade. Same thing, stochastics indicator is overbought, time of entry. We have 1, 2, 3 green candles followed by a color change candle. Market already printed. It's done its daily range. This is the close of the New York session, or rather London session, and we enter a trade 8 pips below the color change candle, and so far the market's gone down about 40 pips. This doesn't really count because we had a news event and the market didn't tell us anything here, technically anyway. So let's go back in history. Again, this is just a review of the systems that I've been teaching, that I've been just 1 second please, my screen just froze. So these are just techniques that I've been encouraging everyone in the mentorship program to use, to take, and how to qualify a trade setup. For example, here, going in the direction of the trend, we're looking at the Australian dollar. We know on higher time frames that the market's in a downtrend. So what do we do to qualify a trade and proper entries? Stochastics very close to overbought. We have a color change candle here. We take a trade 8 pips below, take the trade. We're going in the direction of the trend, so the longer we can stay in that trend, the better. But we do take counter trend trades. Here again, the market's oversold. Stochastic indicator is oversold at the time of entry. It was down here, and we see a color change candle. Now, when I take a trade against the prevailing trend, then I'm not interested in staying in that trend for a very long time. But the market has sold off, done its daily range, close of the New York session, time to get in this trade, just pick up a few pips, and your entry was about here. 16 pips, not a lot, but we know when to take these trades. Or at the end of the New York session, you can probably just take it when a color change candle occurs and not even wait till it qualifies sometimes. Okay, then again, here's the direction of the trend. Color change candle, 8 pips below, and the market went down about 32 pips. Okay, here again, in the direction of the trend, 2 green candles, that's all it takes for a color change candle. 8 pips below, here's a nice trade setup. Again, the market's oversold. We wait for a color change candle. Stochastics is oversold at the time of entry. And because we're going against a trend, we don't want to stay in this trade very long, but it did go up about 50 pips. Then what happened? We had a color change candle, and even though the market was not overbought on stochastics indicator, price action is more important, remember. Okay, it's ideal if we have an overbought and oversold conditions on stochastics, but it's not always necessary to take a trade. And in this trade, all we needed was the trend to tell us that the market was going to continue to go down. Take the trade in the direction of the trend, color change candle, market sold off. Okay, so what I would do and I suggest is go back in history, and if you know the general direction on the daily and the 4-hour chart, you can find these trade setups. If we know the market's in a downtrend, then here's a nice, not only do we have an evening star, but it is a color change candle, and it would have taken about 3 hours for this trade to qualify, because here's a color change candle, and what do we do? Normally take a trade 8 pips below the close of the color change candle. Time of entry, notice that stochastics is overbought. Okay, so qualify the trades. 1, do we have a color change candle? Yes. 2, is stochastics overbought? 3, what is the general direction? What is the directional bias? Well, on the 4-hour and daily chart, direction is down. So even though on the 1-hour chart we're in an uptrend, then we go with the 4-hour and daily chart, qualify it using a color change candle, and in this case, the market did turn around and went north, south quickly. Okay, and then here, so we just go back in history. Here, perfect trades, because not only is price here below the main pivot point, we're in a downtrend. Okay, we've got a color change candle here, and stochastics at the time that these candles were forming, or actually could have started from all the way up here, where stochastics is overbought, and taken this trade all the way down. Okay, so the best thing to do, and I would suggest this to anyone, especially those of you in the mentorship program, is just go back in history, and if you know that the directional bias is, let's say, down. So let's say here in this area we're looking at price going up, right? So you would think that this is going to go to the moon, unless you would look at the 4-hour and daily chart and know that on those 2 charts the market flow is down. So we see color change candle here, right? And then we see stochastics indicator is overbought. 2133 is the settings, and I also use I should put up the other indicator, other pivot point, or rather stochastics, which is 14, because that's even more powerful. When you have 2 stochastics indicators that basically mirror each other, that works quite well. So here again, the 14 and the 21 stochastics indicator are overbought. And we have a color change candle. These are the high percentage trades. When you have 2 or 3 or 4 reasons why you should take a trade. Anywhere else is pure gamble. And so just be patient, wait for the right setup, take the trade, and believe me, you'll enjoy the process. You'll enjoy trading Forex a lot more than if you just took trades like today. Was not the best trading day, and I shouldn't have recommended most of these trades, because there was too many news events. There was too much activity fundamentally. Bernanke speaking, then we had news events all day long, and the markets were simply all over the place. So we'll get back to basics. Just whenever we have a loss, I tend to do that. Just go back to the charts, review, and just look at the trades that are actually profitable, that have made us a lot of money over, the months that we've been trading. So here again, what do? We qualify a trade, okay? And it's easy to get away from what's worked for us. Believe me, it's happened to me in the past where I would start trading some other methodology, something that I have used but not as consistent as what I've been teaching in the past few months. So here we have support. We've got a color change candle. Stochastics oversold on both the 21 and 14. We take a trade. We wait for the market to exhaust itself. It's done its daily range. We've got a color change candle, and price turns around and goes south. So it's conceivable to be able to take both sides of the trade on within a 24-hour period sometimes. This one was a huge rundown. The market completely is oversold. Stochastics oversold. You notice on both 21 and 14. And what happens? We have a color change candle, and then the market turns around and retraces. A substantial downturn. The market went down what? How many pips did it go down about? And you need to calculate the pips. Before you enter a trade, it's very important. And look, and this is what I do. I says, okay, how many pips has the market moved down in that 24-hour period? 223 pips. That's a lot for Australian dollar in one day. And it retraced 100 pips. So it gave back 100, went down 220, and gave back almost 50%. Time of entry, stochastics on both indicators, notice both oversold. Okay, so this is how we qualify trades. Number one, how many pips has the market put in before I'm taking that trade on a color change candle? 223. Exceeded its daily range, which usually is about 80 pips on Australian dollar. Number two, stochastics indicator is oversold on both the 21 and 14 stochastic indicator. We have a color change candle 3, and we take a trade 8 pips above that, stay in that trade, make 20, 30, 40 pips, it doesn't matter. The fact is, you recognize that the market is completely oversold, and we have a color change candle. Typically what I like to do is take the trade and stay in as long as stochastics, if it manages to get up halfway or close to 80, then that's what I look for an exit, or close to the main pivot point. Okay, so if I'm in a downtrend and I'm taking a counter trend trade, I like to exit before it gets to the main pivot point, because usually it doesn't go any higher than that if we're in a downtrend. And as you can see, that's what's happened each day. Market sold off, found support, went up to the main pivot point, tried to penetrate it, failed, turned around and went south. Here we had a major retracement, but even here the market failed to print any higher and turned around and went south. Because why? We're in a downtrend, and occasionally it will break the main pivot point but stall out. This would have been a great retracement trade. You would have taken this trade. Remember, you don't have to take trades in the direction of the trend all the time. The markets are always in a roller coaster mode. So as long as you know how many pips the market had printed before, then that would give you an idea of the retracement you can make. Okay, and here the retracement was huge. So when the market turned around and went in the direction of the trend, it sold off a lot. Okay, let's look at some more pairs. Okay, let's look at one more pair. Remember we were looking at this, the euro pound dollar, and I was thinking, well, it's too late to get in because the market has just gone up so much. And the only thing we can do is just wait for price to find resistance. We have a color change candle, stochastics overbought on the 21 and 14, notice down here. And not only that, we have a nice false break. This would have been a nice retracement. Color change candle, wait for the price to go 8 pips below. Right now you'd be up 22 pips if you took this trade. Okay, so that's it for this tutorial. I'll just make sure that I talk about this in the trade room. We'll have workshops. We'll go over the 1-hour scalp systems. I know we don't review these strategies. We tend to forget them. So when there is a trade setup, you miss it because we're not reviewing. So we're going to continue to review. This is my bread and butter strategy that I've used over the years that's worked. This and a couple of others that we'll talk about in the workshop. mentorship program, definitely we're going to get into more other trading strategies, divergence, price action, trading at previous support and resistance levels on the higher time frames. We're also going to talk about a system, it's a strategy using Gartley's, and I'll explain that also. So if you haven't signed up for a session, please do. And those of you that are interested in the mentorship program, it's $580 for a whole year, very affordable. If you can't afford it, you can break up and pay and pay two easy payments, maybe break it up 2 or 3 months at a time. So please join. It'll take your trading to the next level. So see everyone in the trade room. I hope you have a good trading week. We still have some more economic data coming out in the next few days, and we still have Wednesday, Thursday, and Friday, and we'll definitely make up any of the losses that we incurred today. Okay, that's it. Talk to you guys soon.